you have to deal with someone that has foreign investor experience and real estate experience as well, and knows exactly what's going to happen, and knows that if someone's investing from Spain, for example, I have to I have to be knowledgeable of laws, tax rules and laws in Spain. I probably have to speak to their accountant in Spain. So there's a lot more, there's many different moving parts compared with when we're investing if you're a US individual, you're investing in the US, you're just talking to your US professional advisors, and that's kind of it, right?
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. Hi there, this is Christina Suter with the Real Estate Breakthrough Show, and I have Charles Carillo with me. I said it wrong. Oh my God, I just practiced it and I said it wrong. Charles Carillo with me here with Harborside Partners. As you can see, if you're watching this on YouTube or Roku TV, you can see that right behind him is the placard that says Harborside Partners. So thank you, Charles, for making the time here this morning. Let me read a little bit of a bio of you so people get a sense for your background, and then we'll jump right on into some questions. So here we go. Meet Charles. So here is Charles's website. It actually is his name, Charles Carillo, Carillo. So let me read you what it says here. I appreciate you taking the time out of your day to visit my website. My name is Charles Carillo. I am a licensed Florida real estate professional and Eagle Scout, which I absolutely love, and first became a multifamily real estate investor in 2006. I'm originally from a small town in Connecticut and moved to Florida in 2012. When I was growing up, my father owned dozens of commercial multifamily properties that he self-managed with a small team. His experience was priceless in shaping my future business and real estate investing career. During college, I started an online payment business, which took me to dozens of countries in Europe and Asia to meet partners and clients, forging my passion for traveling. I ran my online business full-time until 2016, when I decided to switch my focus to my real estate investing company. It forced me to hire assistants and start delegating tasks for both businesses. This transformed both companies by freeing up valuable time that could now be used for high value activities, which is very important as we get more and more sophisticated in our investing, that we learn to value our time as one of our primary commodities, Charles. I have to agree with you on that one. Unlike other real estate investors that take a hands-off approach to property management, I self-managed my property for years before hiring my first professional management company. During that time, I learned the intricacies of dealing with tenants, contractors, superintendents, brokers, lenders, and attorneys. I call it tenants, tantrums, and toilets. That's my favorite turn of phrase. And T's, tenants, tantrums, trash, toilets, teenagers. Just keep adding the T's. They're all in there. I purchased and renovated multifamily properties, some completely vacant, and turned them into profitable investments that I still own today. In 2016, I founded Harborside Partners, a real estate syndication companies that offer other active investors and passive investors alike the ability to partner with us and purchase larger, more profitable assets. Currently, we invested in over 250 units worth $25 million. We've designed an easy-to-navigate website that delivers volumes of free education, along with a blog that features educational articles and the latest real estate news. And you have the Global Investors podcast. So Charles, why don't you tell us a little bit about, after your dad had tortured you by making you go to real estate, his real estate multifamily sites, and obviously probably having you help clean up and maybe even do painting, yeah. I'm assuming, right? You still decided to be in real estate. So tell me about that transition in your life between being like a college student or a high school student and going, yep, I'm going to do this business my dad taught me.
It started like in elementary school because my dad had been doing it for so many years, and it was like he didn't trust me with painting at that point, but sweeping hallways was a big thing, and okay. I despised sweeping like 3-story apartment buildings and sweeping the hallway, and you have to start all the way at one end of the 3rd floor and down, and it was just like terrible. Yeah, it was just terrible because everybody asks you who you are because it's just amazing. It was something, but and then it morphed into my dad had like superintendents that collected rent with him, but sometimes they wouldn't collect all the rent, or people were, it was a lot of cash pickups. It was very rare that he would get like money order stuff. This is back in like 80s and 90s, and so we would have to go door to door sometimes and collect rent, and sometimes my dad would send me upstairs because why go up 3 floors of stairs when you have a child that can do it for you, and collect rent, bring it downstairs to him in the van that was like writing receipts, and I run a receipt another 3 floors up. And that's kind of how I got it. And I didn't care for it too much, to be honest with you. It was like, it just wasn't, these weren't beautiful buildings as you might see on some people's websites and stuff like that. They were C minus. Some of them were D class properties. As my dad kind of got more experience in his real estate career as well, he started buying better properties. And that was something when I started buying properties that he made it a point that I do that. And that was very important. And that's something I would always tell first time investors, don't look at just the cap rate or the number of units or the unit price. Look at the area. I mean, real estate is so by the neighborhood, by the block. And I mean, if I had properties that were 1 block away, they might be 10% higher in price. They might be even more than that. I mean, it's just amazing and that's normal for real estate. If you go 2-3 blocks the other way, or 100 yards on the other side of tracks, it can change the value of your property so much. And that's how people, when they're looking to rent properties and looking to buy properties, they're using those boundaries with their real estate agent. And they might just zone your property right out because it doesn't fit into what they know of the neighborhood. So
yes, I've spoken as a true longtime real estate investor. It does make all the difference in the world, just a block or two. Here in Southern California, we have a street called Lincoln, and Venice Beach is on one side of Lincoln, but it travels across the other side of Lincoln. Well, when Venice Beach was, regentrifying, it was the ocean side of Lincoln that was regentrifying, not the Lincoln side of Venice Beach that was regentrifying. And it made all the difference in what your comp meant and what property you were purchasing, and whether or not a certain family that you were maybe rehabbing for would come in and buy that property because they wanted to be on the ocean side of Lincoln, not the other side of Lincoln. And you don't know that unless you really have learned to do your due diligence and pull out and see the neighborhoods from the top. That's the easiest way I know to define neighborhoods is when you pull out on Google Maps, right? It's from the top. When I started investing in real estate, to do a comp, I had to print out, the old Thomas guides. Do you remember those, right?
Yeah.
I had to print out the Thomas guide, tape it together. So I now had a map of the area I was comping, take the MLS list and put a bunch of red dots and then arrows with prices, bedrooms. And that's how I used to comp something. Now you go to Google Maps and you pull back and you go, oh, there's the neighborhood. But you're absolutely correct. I mean, newer buyers need to understand that a neighborhood is well defined. It may not be defined to them, but it's well defined to the people who live there.
Right. And if you're off a couple blocks, it's not really a huge problem if you're there for if you think you're going to be there 10, 15 years and you see some sort of wave of gentrification coming. But if you have a much shorter horizon, like a flipper has to know exactly. They can't be getting cute and getting to the edges of gentrification. They have to be well inside of it when they're doing it and make sure so that they can actually get the price, and then also that it'll actually appraise, and they have a lender that's going to give their buyer actual money for this property. And these are all very important things. But if you're buying property and go, in 20 years and I'm putting this forever or whatever this is, that's where, you make your real money in real estate, is where you're buying for long term and you see a trend that's happening. And you're able to kind of get involved with that gentrification, just like what's happening in Venice Beach, as you were explaining.
Yes. So you went and had your own, you worked for another company and traveled internationally, or you had your own company and traveled internationally? I'm sorry, I should remember.
No, it's fine. I started a payment processing company in college, and it kind of moved a few years, not moved, but like where we were focusing for clients started being a lot more foreign clients and foreign partners that we were working with, mainly in Europe, mainly Eastern Europe. So for a month or two a year, I used to go there, and because you're dealing with people, you're meeting with people, flying different places, and it would usually be because you spend a week here, a week there, and all these different. So it was when you're talking to people in any type of business setting and had nothing to do with real estate, especially not U.S. real estate, and people are asking, they're business owners and they want to know, hey, what else are you investing into? And this is what you're talking about when you go out for dinner and stuff like this.
Mm-hmm.
And oh, real estate. And I'm going through all these pros of U.S. real estate, and how we get the financing, how we get the rents, and what the returns are, and this and that. And everybody's like, oh, how do I do that?
How do
And
I
I was
do
like,
that?
I have no idea, because I'm, you're not U.S. based. Like I have no idea. So when I was getting more into real estate, I found that people would reach out to me, and one of my first investors was a foreign expat. And so it was something that the first passive investor that I had was a foreign expat, one of my good friends. And he, we kind of went through the whole process.
So for those of us not sophisticated, a foreign expat is?
It's someone that's a U.S. person that's not living abroad.
Okay.
So it was much easier for them. They weren't a true foreign national, so they had a social security number. He had an LLC and stuff like this already set up. It was much easier, but he was never in the country at any time during when this property was in our investment stages, right? Maybe a week or so, but he never saw the property. He had, nothing like this. And so it was like that there's a few more hurdles for him when he's doing his taxes. But I had other people that he would talk to and say, oh, this person's very interested as well in town here where he was living in Europe. And when you go through the whole process, so I said, I was going to start a podcast about this, of going through, and it's a lot about U.S. real estate. And it's about probably 55% to 60% of people that listen are U.S. based real estate investors, and the rest are foreign investors or interested in foreign investing, both active and passive. And we kind of go through, a lot of the episodes are universal to the U.S. and international investor, and then some of them are very specific to foreign investors, where you have so many more hurdles. And if we think it's bad as U.S. investors, it's even more difficult for foreign investors tax-wise and everything like that.
Yeah, that's exactly where I was going, was I wanted to make sure and highlight that piece of your history so we could talk a little bit about how you, both as a syndicator and as a podcaster, focus on what does it mean to have international investors in the United States, right? People who are outside the United States wanting to invest here. So let's delve into that a little bit, since clearly you're more of an expert on that than I am. I do not. I've had a client who called me, every week from Spain, but he owned in New Jersey, and he was a United States citizen, but he was stationed in Spain. So he was calling me from another country, but he didn't have any of the international complications you're talking about. Yeah. Grew up in New Jersey. He owned in New Jersey. His handyman was from New Jersey. He was, this was a very, he owned single families in a particular district in New Jersey. Right. And there wasn't even really a property management company in that particular district. So that tells you, it was all like C-class, single families, so I don't have that experience at all. So once you fill us in a little bit and educate us a little bit on what you've discovered about that actually really isn't that complicated if you know blank.
Yeah. So when people reach out to us and I'm speaking to them and they're talking about, I'm international, I'm foreign investor, I'd like to invest. Maybe they could be a foreign national. So someone that's international now, living here in the United States, they might not have an SSN number, social security number yet. And kind of going through the whole process of how do I start investing? What are the steps for it? And I kind of get an idea for where they are. And then what I'll do is I usually will do a referral to a number of different attorneys and CPAs that they can speak to. And usually with the CPAs and the attorneys, if someone's from one part speaks one language or something like this, I can bring them to another bilingual agent or attorney that will be able to help them and be a little bit more knowledgeable about their home country as well, and kind of walk them through the intricacies of investing in the United States and what has to happen. Because there's really, just like with any type of advice, professional advice, if someone's investing $50,000 in the United States, what advice they receive is going to be much different than someone investing $500 or $5 million. And it's definitely going to be a different business plan too. Someone with that type of money, it'll change what they're looking for a return and their type of involvement in the deal. And it could be either way, but usually it's, you're dealing with family offices, something like this, that's foreign. They are investing larger sums and they want a more passive role, and they have a set, usually not aggressive return number that they're trying to, a metric they're trying to reach.
Okay. And it makes a difference, I believe, and again, I'm not knowledgeable in this, you are, what price point they're investing from outside the United States into the United States affects what code applies to them, if I remember correctly.
Yeah, and then now there's different withholding and everything like that, depending on what their strategy is. If you have long-term hold, if you have someone that wants to flip property when they're selling that property, what's going to happen? And that's why putting them together with counsel that understands not just there's just everybody's specific, right? Every professional is specific, especially attorneys, just like a doctor is. That you have to deal with someone that has foreign investor experience and real estate experience as well, and knows exactly what's going to happen, and knows that if someone's investing from Spain, for example, I have to be knowledgeable of laws, tax rules and laws in Spain. I'd probably have to speak to their accountant in Spain. So there's many different moving parts compared with when we're investing if you're a US individual, you're investing in the US, you're just talking to your US professional advisors, and that's kind of it, right? You're not really going and having to two people talk to each other, which I imagine gets very expensive when you have two lawyers talking to each other that you're both paying for. And so it's just these are kind of knowing what they're planning on, and you probably tell them, because when you start getting more money involved with it, now it's like, okay, well, they have where in the United States we have I think it's like 11 or 12 million dollars is our federal for estate tax. But if they're a federal investor or a non-US investor here in the United States, it's only like $60,000. So someone making $60,000 on an investment in syndication, especially where we are now, isn't unreasonable, even on a $50,000 investment, or especially on $100,000. So you need to have specialized advice on what you're doing in that situation. So if you have investors that are interested in investing in, taking money from foreign investors to invest in one of your projects here in the US, you just have to make sure that all of your team is on point as well. So your attorney, and if you're doing a syndication, your real estate attorney and your syndication attorney, your SEC attorney are knowledgeable on what's happening there, and that they're able to handle it. And a lot of large syndicators out there won't even take foreign investors. And so it's something that some do, but some don't. So it's kind of a niche that we've kind of carved out for our company, Harborside Partners. And, we like working with any type of foreign investor, and if they're active or passive, and hopefully we can point them in the right direction.
I think you just hit what I was hoping you would hit on, which is, how does somebody from the outside invest inside? What help do they need? And you just described it. They need counsel from an attorney that is in their country, as well as potentially a US based attorney, as well as a CPA, so that they're capable of having the conversations about what it means to them tax wise, because it's a completely different tax effect potentially for them as a foreign investor, not just because they're in Spain, but because there's, a US investing in a US asset. And that exact relationship between the US and Spain will define what happens for them. Because sometimes it literally changes from country to country, I assume. If I'm in Spain and I'm investing in France, it's going to be different than if I'm in Spain and investing in the US.
Yeah, it's all about tax treaties. That's why a big thing you've probably heard from people that are investing from Canada into the United States. Tax treaty was written prior to us establishing, let's say, the LLC. That's why a lot of those deals are done with LLPs. So it's something that small little nuances like that are things that you have to be knowledgeable about, and these are expensive mistakes if your group's not following them, because you don't want one of your investors getting a tax bill that they don't have to pay.
So how does that affect you as a syndicator? So we talked about how it affects them as an investor from their side, and what the channel is, and how you can help them to transverse that channel to being able to invest in one of your syndications. But from your side as a syndicator, how does that affect you?
Well, the biggest one is on withholding, and this can change per deal, so I don't want to go into like specific percentages, but it's something where make sure your accountant that's doing your distributions, which most likely it would be your accountant for your firm, doing the distributions, make sure they're knowledgeable of that and they know how to do the withholding for a foreign investor. And that percentage, they now, like, say, we're in 2021 and something's paid out, the withholding's taken off of it. subtract it. They can now get this back in 2022 when they're filing that 2021, just like a regular tax return for a U.S. person would do. The beauty of being a U.S. investor in the U.S. is that we can keep that money right away, and we don't have to do the withholding. Usually, obviously, if you have some issue with the IRS, they're going to be doing it. But the thing, though, is that for a normal investor that doesn't have any issues with the IRS, you can now, you can take that money that you earn today and use it for the rest of the year, and then pay taxes on it if there's anything required for your next year. So it's that's one of the biggest differences.
Okay. So it really sounds like you rely again on your professionals being able to define it, having not so much like once you've got the cash, you've got the cash, but making sure that the flow back out again matches the way it had to come back in. So again, you're really talking about international code, and cash is kind of cash once it hits you.
Right.
That's
the other thing too is
enough?
Yeah, exactly. And one thing I just want to put if anybody that interested in working with foreign investors, and make sure that you never accept money into your account, and your attorney probably would never, but into an escrow account, but never accept money. You should never accept money into your account anyway as receiving money in a syndication, but don't receive any money into any accounts that you might be managing or part of, or an escrow that's coming from a foreign account. Have them have the money here in the US before it goes to you. And then that way the KYC, know your customer, has been done. The anti-money laundering, AML, all these different little words have been checked out. Have been checked out. And because no matter how big your outfit is, your investment outfit is, and how much work you've done, you don't have floors of people like Wells Fargo or Bank of America that are checking these individuals to see if they have ties to stuff that you could never check out. I mean, you can't just like Google person's name and like drug cartel, right? I mean, so it's something that they're checking out to make sure there's no red flags on the person. So if you're getting money from a U.S. bank into your attorneys or your title company's escrow account, whatever it might be, then you can rest assured that passed some sort of KYC AML check, and that's kind of reduced any liability that you might have that you're investing illicit funds.
That's awesome. That's a very important piece. And I'm glad that you made sure and stopped and told us that, because I think to assume what I did, which was that it's just between the professionals, and then once you get the money, it's free and clear. It's like, no, not really, Christina. You really want the investor to clarify their funds. They're responsible for getting their funds inside the U.S. by working with the professionals that you've connected them to. Once the money's in the U.S., then you're free to start participating with them as a U.S. investor, because their money is now U.S. based. Am I understanding it correctly?
Right. It just, that's exactly. It just takes a lot of risk off of our plates and puts it back onto the large banks that have the resources to be able to check someone out in probably in days what it would take us if we were even able to do it in months or years. So.
Right. Any other tips or tricks that you feel like people really should know, or new people should know before they start trying something as complicated as what you're talking about?
Just if you're planning on taking out, speak to your number one. If you're doing a syndication, that's what it sounds like we're talking about here. Speak to your SEC attorney, number one, and make sure. I would imagine most of the larger ones that deal with real estate syndication have had foreign investors, and they can explain to you different ways of going about it. That would be probably number one. They could reach out to me. I can send them links to things they could check out. So feel free for that. And then also speak to your accountant, who's ever handling your bookkeeping, accounting. You want to touch base with them and let them know what you're planning on doing, and if they have knowledge or what you should do. And they'll be able to point you in the right direction one way or another to kind of let you know what they need to do. And usually if it's the first time they'll do some research on it and kind of come back to you with it. And what their plan is should match with like your SEC attorney's plans. Because most SEC attorneys I've spoken to in the United States, I probably spoke to a half dozen of them, some of the main real estate ones that most people will know. They've all had experience with it. So just make sure that yours has experience with foreign investors before moving forward and saying, okay, it's fine, we can accept it. And then they'll know and then pass your clients off to if you need professionals that work with them, you can reach out to me and I can pass them to you as well. But reach out to ask your SEC attorney and your accountant for recommendations of someone that your clients should speak to as well, and try to get them the right counsel here in the United States that's going to be more on their level to kind of point them in the right direction, tell them this is how you have to be structured for this type of investment over this type of, everything.
So I'm going to share your website again for a minute, because I know that you've been very polite and not pushing your particular syndication or product, but you guys do actually have a lot of expertise in this area, and you actually have a lot of resources. So I'm showing right here your page where it says resources, real estate news, educational articles, YouTube channel, foreign investors, investment glossary, recommendations. So you actually have quite a nice, strong resource base. And again, this doesn't replace the level of experience and expertise. It doesn't replace a lawyer. It doesn't replace a CPA. It doesn't replace any of that information. But for somebody who's trying to sort of approach this, whether they're a foreign investor trying to understand that they are able and capable of investing in the United States safely and soundly, because the United States has actually, I think, a very good real estate investment opportunity, or whether they're a syndicator looking to someday maybe grow up to be you, then there is some places for them to start here on your website.
Yep, okay. Definitely.
So, so I know I wanted to just touch on briefly. So we've talked a lot about how you take foreign money and how you do syndications. What do you primarily invest in? So if somebody wanted to join one of your syndications, what is the primary asset class you invest in and the structure you use?
So the criteria and the strategy we employ at Harborside Partners is we're really looking for our specialty is really multifamily, and 75 plus units and $5 million plus purchase price.
Okay.
And I always have a lower number. I know you talk to other groups and they might say 150, 200. I just when we're getting into where we're talking right now in 2021, we are in a very hot portion of the market cycle. And like when we were buying last year and we were putting together syndications, we just don't buy one property in really hot markets. We actually bought 90 units, and it was split between a 22 unit and a 68 unit. So we kind of search out when we're looking for returns and edit our strategy as where we are in the market cycle. Whereas 5 years ago, we could have said, oh, we'll just buy like a 150 unit or 100 unit property, but the prices for those are extremely high. So what we've done is finding properties. This is in Tampa, which is an extremely hot market that we're looking at, and then we invest into in Florida. Oh, right. And putting together smaller properties that are kind of off the radar of larger national syndicators, and working and finding and putting together those projects is kind of where we are. So that's the strategy can change a little bit, but really it's the 75 plus units, $5 million plus purchase price. We are into other asset classes as well. We're negotiating out just as joint venture partners. So what I mean is just our partners ourselves here, no passive investors. We are actually negotiating right now a self-storage complex in South Carolina. And we are actually in the process of putting together a development in South Carolina as well for a townhouse community. So it's kind of where we are with prices so high, and we have the cost of product that is 40 years old bumping up now, getting close to what we can build for. It's kind of allows us to start looking in that direction. So not that you want to go and start, the shiny penny kind of thing. But the thing though is that it's really kind of figuring out exactly where the market's going and how we can make money there and how we can do it in a risk averse area.
Yeah, I find Paul Moore, somebody who I've looked to many times, he's not specializing in multi-units right now. He's doing storage. You know, if you want to join his syndications, that is what he's moved over to, because the 100, 150 plus, which is his favorite asset class, size of asset to invest in, is so competitive with multiple different professional syndicators that are sort of hammering after that. But there is, I mean, I'm a mom and pop investor. All of my multi-units have been 30 units, 50 units. I mean, I've only invested in a larger unit as part of a larger partnership, but anything that I've owned personally has been in the smaller end. Kind of like your dad, I hate to say it, Class C, you know, what can I say? I'm now trying to buy better qualities, more single families, because I'm getting too old to deal with the Class C tenants and tantrums and toilets and all that.
Yeah. The thing though is, I mean, I love buying in C plus areas. I mean, I still do. You have to say it. I mean, I don't want to go into like C minus or anything like that, or especially not D. But C plus. If I'm buying in an area that's C plus quality and maybe a C plus area or a B minus area,
Mhm.
but the United States has such a lacking of affordable housing, and even with how high prices are going, it's still a lot more expensive when you're building. You can't really build efficiently C-class properties.
Okay.
So no matter what people tell you about, oh, I'd rather do one with the pools and all this kind of stuff, maybe true. But the
Maybe.
thing though is that there's always going to be a calling for solid C plus housing. And it's something that, I mean, when we're looking, like I said, about our building, our development, I mean, it's not going to be C class. It's going to be a B or B plus townhouse community, because it
Sure.
makes sense if you're building. I mean, it doesn't, finishes aren't really a big deal at that point. The changes, differences between C and B class when you're building. But the thing though is that I just don't look down on C plus or C class properties. I think it's a great area to be in, and it's a very solid asset class too.
Very sweet of you. Thank you
Yeah.
very much. I appreciate you
Mhm.
coming to my defense. And it's good to know what you guys prefer to invest in. So let's switch for a little bit. We've got about 10 minutes left of our time. Let's switch a little bit and let's talk a little bit about, like, you've been investing in real estate for a while. I mean, you kind of cut your teeth on real estate, sweeping the halls at, 10 or 11 or 12. I can see you doing that, as a matter of fact. So what is your worst real estate story? We love real estate. Real estate can
Oh.
work great, and real estate can be a real downer and a real pain. It really depends upon the project and your partners and your team and what's going on. Even some of the best people I follow in real estate have run into complicated deals even late in their career. Tell me a little bit about your real estate story, what you did, and what you learned from it, how to grow you up.
So I guess one flip I did like 12 years ago, I lost money on, just a few $1,000s on, and between a bunch of other flips, and we just sold it much sooner than we thought, than we should have. But it was just it wasn't a great property, but it was something we never purchased. But I think the biggest, that wasn't really a huge thing because we had another deal going at the same time that covered any loss there. But my first multifamily property that I purchased in 2006, I still own today. That one got a little over my head on that property.
Okay.
There was
Yeah, we
a
do that.
it was just like I didn't have any of these fancy estimates or anything like that you should have when you're buying property, and knowing exactly what I was going into. And that was a big thing. And it was like a month of hell to get that property online to get it rented. But it was quite the learning experience. And I keep track of mistakes I've made in business and real estate. And I had a lot of bullet points from that property of what I should never do again. And the area it was a quiet area. It was a very nice, quiet area. It was just certain small things, and you're dealing with older properties. This one is in Connecticut, and a lot of old properties in New England, and this one just didn't have enough parking. Number one, off street, and I was living there for like 5 years, so it didn't matter to me. I had an old pickup truck. I park on the street. I don't care. But for tenants now, it's fully rented out. It's just that's a hindrance to someone that wants to live there, right? And it's also something too is where when we were doing property, if I have a property that's literally 2 blocks away, that I've had tenants in there since I rented to myself in 2010, 2011 that are still in there today. And those were 3 bedrooms. So it's like, if I did more research on, uh, what units were renting and had lowest turnover and stuff like this, I would have bought a little bit bigger house property
Mhm.
with, because it's a 3-family house, with maybe an extra bedroom on each floor or a few hundred square feet more on each floor. And that would have been much easier to keep our turnover lower. And that's number one. But really going in and having an honest depiction of kind of what type of repairs are actually required to renovate that property. And I think that's very important that someone does that initially. And we didn't really have comps in the area. We knew what they were paying, and we had renters that wanted to go into it. And not that we were really jacking rents that much. I mean, it was like $100 or something. It wasn't like a huge thing. And we already had all of our renters laying out of what we were going to put in there and stuff like this. So it wasn't too much of an issue. But the thing though is that if you had gone and we actually had gotten estimates for doing the work and everything like that, it would have been a lot, a lot smoother of a project. You're not, you would have had money to do everything all at once and not piecemealing stuff over a couple of years. Like, this hot water heater, it can last another couple of years, and hopefully it does. And this has to be done. And yeah, so it's like, that type of stuff. That's why I always tell people, just do something first property, buy something that's like you think's turnkey. There'll still be work that has to be done. Don't worry.
Mm-hmm.
You'll have the work to do, but don't buy something that's like, oh, I've got to like, this has to be all redone here. I've got to put new floors in. I've got to do this or do that. Buy something that's like, I got to put some outside lighting in, and this has to be painted. And, I'm going to put a new vanity in this bathroom, like simple stuff. And on your second deal, that's when you can go crazy. Because on my second deal, I purchased something that was like, it was really, really turnkey. And I just did a little bit of work to it. And that thing is probably my best asset. I own 100% myself. And it was just like literally a block away. And it's just amazing how more parking, how a garage, how bigger units for different, in every area it's gonna be different. Maybe you're in an area that would love these small 2-1s I have on one street, but would not really be interested in these larger 3-1s over here. So it just depends on knowing what's renting in your area and have an honest idea of what the rents are and what they could be. But also just having a real budget that you've put together in knowing what it's going to cost, and make sure that you have that money up front in your savings account so you can write those checks on day one and get the work done. And you're not doing it like I am, where, you're doing stuff little by little. Because then on the second one, when I purchased it, like, we were switching over from oil to getting natural gas and all stuff. And I would have done all that stuff on day one if you had it done correctly. So It was like, small stuff like this. That's what I would say is, so a little bit more planning, not just pulling the trigger.
No, it's an ideal story. It really is an ideal story. The difference between a property where they have you chasing your tail because you're just not prepared, and what all the little ways you cannot be prepared for a property, and being prepared. Like, I could still do a bigger mess like this first one was, but just being so much more experienced and having that, being prepared for the check up front. So last thoughts. So financial freedom and using real estate to break through to financial freedom is very personal to me.
Mm-hmm.
And so why are you, given that you've now been in real estate for a lot of years, why do you continue to recommend investing in real estate for financial freedom? And why do you care about your financial freedom? And what does it mean to you?
Financial freedom, I guess, as the years tick for me, the thing is it's more freedom. The financial part comes along with real estate. I mean, you can be set up so passively with it. And once you have it, you can start multiplying your income, and that comes along with it. The freedom, though, it just comes down to the most important thing for me as it is now is just being able to, buy properties and be able to cash flow on those properties, and having a team in place, professional third-party management maybe, that manages those properties for you. So you're kind of out of the day-to-day, and that allow you to help build your whole portfolio larger. But it's also going to allow you to, why we're all invested into real estate is everybody, passive income, which it's not really passive. It's really, it's like
really active.
It's like a semi-passive. Even if you have a professional manager, I mean, it's still a semi-passive, because people go, it's passive. I'm like, well, when you need a new insurance policy, do they call you to sign? Yes. And when you have to write the tax bill, yes. So it isn't when I'm in passive deals, I get money every quarter into my account, right? And they send me a report, and I spend 60 minutes a year, and most of that time is just forwarding a K-1 to my accountant. And that's passive, not passive where like, hey, listen, you're gonna have to do this roof over. Even if I'm not there, you're gonna have to find something. Like, that's not passive. And I have deals, I have properties like that as well. I mean, everything that I own myself or with joint ventures, that's how it is. And that's perfectly fine, because you're not in the day-to-day. You're just kind of doing larger CapEx things. But so know going in how active and how passive you want to be, and be honest with yourself. I mean, if you're working 50 hours a week now, and now you're going to buy a business, which is multifamily, and take that on, I mean, you might be a little over your head. Whereas maybe you have your property manager already set up, And maybe the first 60 days is kind of crazy, but after that, you kind of get stuff going little by little. I mean, you can really get stuff on track and actually make it a semi-passive investment where maybe you're spending, you have one call a month with your property manager, or they reach out to you or something by email and they'll give you a little update of what's happening. When you look at your reports or you look at your bank accounts, you'll know when deposits are in there and stuff like that.
Yep. Sometimes you can manage something in as little as, I could say, 2 hours a week if you have that all set up, but it's really going to be 2 hours a week. Charles, how do people get a hold of you? If they want to invest in Harborside Partners, they want to do a syndication with you, they're a local investor or they're a foreign investor, how do they get a hold of you and how do they invest with you?
If you're interested in investing in real estate, either passively or actively, set up a free 30-minute call with me. You can just go to a direct page on my website. It's called schedulecharles.com. And you can set up a strategy call with me. And you can pick a time there that works for you. We can get on it. And if I don't have answers for you, I will surely point you in the direction to someone that can help you. So anywhere on my website or just go to schedulecharles.com. That'll bring you right to the page and set up your 30-minute call. And hopefully we can help you start your real estate investing journey, or we can help you along your way of scaling it.
Perfect. So Charles Carillo, Charles, Charles, Carillo, Carillo.com. Thank you so much for your time. This is Christina Suter with the Real Estate Breakthrough Show. You can find us on YouTube, Roku TV, iHeartRadio, Spotify, and iTunes. Please leave a comment below. Have you ever worked with a foreign investor yourself or been curious as to what your questions would be if you did? And we'll try to get you an answer. Good night.